Fair enough. So that's okay. Perfect. So it's just the three of us. We will see who will join and who will come. So yeah, let's discuss a bit about risk and money management. Thank you, first of all, for the invitation, Mr. I'm very happy to be here together with you. I mean, we are talking for quite a while, for months or even years, about trading and topic, and I'm very happy that also in Romania, trading investment has quite some level, and that's why you also asked me to translate the book or to publish the book in Romania. You wanted to translate it in total, so you helped me. I'm very grateful for this. So yeah, let's talk about the real reason for trading success. So what it might be. First of all, of course, there is a disclaimer, risk disclosure. This is educational purpose, okay? So it's not about you have to do this or you have to do that. It's education purpose, and I really like you to understand that trading is something that you do on your own risk and on behalf of your own responsibility. Losing money is part of it. That's why we need to talk about risk management, and that's why I'm so keen to talk about this. So this is me. Yeah, I teach how to trade. That's what I do. I mean, trading is my life for everything. So I trade. I'm a day trader. Mostly I'm trading short term, but I also do a lot of other stuff around in the financial industry. Somebody told, there was a magazine saying, I mean, you can read it by yourself, that I'm one of the most successful traders. No, don't know how they measure it, but well, I'm doing quite well. So what am I doing? Of course, yes, I'm a trader, technical analyst, certified financial technician. What you also mentioned, say a best-selling author. So in Germany, it's very best-selling, Risiko and Money Management, 55 Reasons to Become a Trader. I have this in English, and right now I have this also in Romanian language. Thanks for your help and for the initial of this. And of course, there are some more languages I'm working on, like Japanese, Indonesian, Spanish, French. So quite a lot, because it's very important to do so. I'm president of the International Federation of Technical Analysts, and I'm member of the board of the German Association of Technical Analysts. So I'm very active to teach and to do all the education about trading. I'm speaker, of course, in Germany, but there's some more. We have the IFTA conference, which is international. I was in Indonesia, London, China. I'm regularly, third time now, invited to China. Unfortunately, I can't go myself, just send a video. Right now, it's very, yeah, it's annoying, but that's what it is right now. Forex Expo in Dubai, and I'm very happy to be at moneyshow.com, which is a very important trade fair in the US. So I'm really happy about this. That's me in a nutshell. And what also might be important, I don't know, is that I'm traveling the world. So right now I'm in Colombia, in South America, and well, I just go where I like to be and stay there for a while. So risk and money management, what it's about, and what it's also about in the book. Of course, when it comes to risk and money management, people also ask themselves, okay, yeah, I don't want to lose any money. That might be true, but of course, when it comes to trading, we are about to lose money. That's what it is. And the question is, do we survive losing money? Do our account survive losing money? And obviously, with a lot of traders, they don't survive their losses. And that's quite a huge issue, a huge problem. So a lot of traders, especially when they begin, they ask themselves, okay, how and where can I enter to make the biggest profit? So this is one of the main questions they have. The question they forgot about is, oh, where do I exit? And why? And when? And at what point? And what does this mean for my account? So this is very important to understand, that you not just need an entry strategy, you also need an exit strategy in both terms of a profit as well as of a loss. And if you forget about the loss, it might be happen that you have a couple of trades and then you're broke. Your account is gone, your money is gone, and well, it's the opposite of what you expect, because if you trade, you expect getting money, not paying it, you know. So usually in total, more than 90% of all traders lose their, I say, first account. That's why I have it written there in these terms. It's their first account. Of course, we learn from our mistakes. A lot of people then put more money into their account and continue trading. But first of all, money is gone, and well, actually nobody really wants it. So it's very, very important to talk about risk management in order to remain capable of acting in the long term, so that we always can work in trading. And to talk about what this really means, and also of course in the book, this is the long way back. I call this, it's a table of doom, or it's a slide of doom, because what we see right here is how fast things go down and how difficult it is to come back, to break even, to zero. And what you see here is you might have a loss of 5%, and to come back as a recovery, you just need 5.3%. So that's not quite a big deal. It's not easy. Nothing is easy, but you can do it. So it's not a problem. Same is true for 10%. So if you're down 10%, you just need 11.1%. And this is also doable. You can do this. And also here, it's not easy, but it's manageable. Take some time, but you can do this. And it's just like all the waves you have in your account, getting up, getting down a bit, but these are usual movements in an account. Same might be true for 20%. If you're very aggressive as a trader, you might be down like 20%, but then to come back, you have to make a profit of 25%, which is not easy at all. And it might take quite a lot of time to come back, because 25% is more than a yearly performance of a very good fund manager. So just to make clear that that's not an easygoing topic. So your recovery to loss ratio is 1.25. So you need like a lot more to get back to zero than you lost. I mean, as an example, if you start with like, let's say 10,000 euro or dollar, and you lose 20%, you're at 8,000. And to come back, you need 2,000 more, which are 25%. And that's not that easy. And of course, if you look down more a bit further, like 30, 40, 50%, well, it's pretty obvious that if you're down like 50%, you have to double your account in order to get back to zero. And the moment you're able to double your account raises one question: why did you go the detour to go down to 50% and then double it, just to realize that at the end, you went nowhere, because you're still not in a profit, but you made a lot of experiences. And if you can imagine what happens if you're down 60, 70, 80, 90, or even 95%, it's like you're already broke. Because if you're down like 60%, you need to have 150% of your account. So you have to more than double it. And that's most of the time, it's quite impossible. So lots of traders can't do it. They can't do it, and they will not survive this game, or their account, of course, not themselves. So it's very, very important to make clear and to realize that this table shows one way, and this way is down. And there is a number which is a no return number, and this is 20%. So if you're down like 20%, okay, that's not a big deal. You can make it, you can come back. It might take a lot of time, but you can come back. If you lose more than 20%, 30, 40 and more, from my perspective and from my experience, there's no way back. Money is gone, broke. Maybe you have realized this already, maybe you made this experience, but first of all, my advice for you, don't let this ever happen that you lose more than 20% of your account. So that's very, very, very important. So the question is, how can you achieve this? First of all, you have to define risk by yourself. Some questions are, I mean, risk, what is risk? And risk is very, very individual. For me, myself, I'm very, well, I'll say, I'm capable and cope a lot of risk. So my understanding of risk is pretty high. I realize this in everyday situations. I realize this also in trading. There are people who don't like to take over a lot of risk. So they behave differently in daily life, but also in trading. So the question is, what do I want to do with a trade? So do I want to be like an investor? Yeah, or do I want to have fast money? Yeah, do I want to have some income? Or do I trade for wealth? It's different. And I have to do my risk definition in a different way by this. In what window of opportunities, what time frame is it I want to act in? So is it like daily, end of day, weekly chart as an investor, or is it more short-term intraday trading like I do? I like intraday trading. I like 5 minutes charts. So when I trade, I have 1, 2, 3, maybe 4 trades a day, but I'm done with it within an hour. That's it. So it's a matter of choice, and I have to adjust my risk management of this. Okay, and most important, do I want to act more aggressively or more defensively? So am I more the aggressive guy? Can I cope a lot of risk? Can I deal with this or not? And if you are not clear with these questions, if you don't have clear answers to this, I can promise you right now that it will be very difficult for you to be a successful trader, because you don't know where you belong with your risk. And it might happen that you take over too much risk or too less risk regarding on your personal profile. And that's very, very important to answer. So take your time and think about, okay, what will I do with my trading? What do I want to achieve? What kind of trader am I? And this defines, of course, your style of a trader. If you're a scalper, very, very short-term, or a long-term investor, completely different, but it's a matter of type, personality type. So that's something we have to think about, because if trading doesn't fit to your own personality, like, hey, I'm more aggressive or I'm more defensive. If it doesn't fit to your own personality, it's very likely that once you open a trade and it goes in the wrong direction, that is a loss. It's very likely that you get into the trade and disturb the market and what it's doing, and close your trade without having a reason to, just because you have taken too much risk, you risk too much money, and you can't deal with the amount which is, well, in the fire of losing it, you know. So maybe you already realized it, maybe you already done it, that you disturb the trade, that you kill the trade, that you close the trade without having a reason, just because you're down, your loss is too high and you can't cope with it. So that's very, very important. And by the fear of the loss becomes real. Not just because the market brings a loss, it's by ourselves. So this is my experience with too high position sizes. And as far as I know from others, it's the same problem they have. So position sizing, risk management is the key here, just for let a trade move, let a trade go. And so even then, it's very, very, very difficult to let a trade run, to see how you get in the loss and you come back to a profit again, you come to a loss again, come back to a profit again. So you need to trust your strategy, you need to trust everything you do in trading. And that's why it's so important to make sure that the trading you do, the strategy you follow, the risk you take over, fits to your own personality. And therefore, there are some very, very simple questions to answer. First one is, how much is my trading account? So what is on my trading account? And by trading account, I really mean your trading account, not something else, insurances or whatever you have as wealth. It's just the money you have on your account. And that's what you need to think about. And this is also this is the starting point for more for more calculations of the risk you take over. Because maybe you feel like, yeah, I can risk like 500 euros, but if your account isn't big enough, you just do it 2 or 3 times, and then you're not able to trade anymore because there's too little money on it. Okay. So account size is the reference point for every other calculation. And some more questions. How much risk am I willing to take in a single trade? And it's also pretty obvious to answer this question. And also here, if you feel like, yeah, I can deal with, well, like, let's say 100 euro, then please be aware that it's not just one time 100 euro, it might be 10 times 100 euro. And this adds up, not 100 anymore, but 1,000, which is completely different story. And when I'm doing some in-person presentations, like on a trade show or so, I ask people, okay, who can risk, who is fine with risking 100 euro? And everybody says, yeah, me, no problem. I can afford losing 100 euro. And then I ask them, okay, just give me your 100 euro right now. And what happens? Nobody does. Why? Because they don't want to lose it. See? So that's the point. So how much risk are you really willing to take over with a single trade? And how much over risk is acceptable for you in general? Is it really like 10 times or 5 times? And if you feel bad about it, your risk is too high. The amount of money is too high, then you have to lower it. So that's why we have to think about this, because it's not just a matter of your account size. Of course it is, because it's a calculation basis, but it's even more the matter of the psychology side, that you really can afford in your mind losing this amount, and that you can deal with it, that you still are calm, and that you still are okay, and that you still are able to go into the next trade and open the next position and the next position and the following next position, because you have followed a system, and if the system gives you a signal, of course you need to open the trade because it's your system, right? But if you don't have any money more left, well, you can't open a trade, right? Or if you're not able from the psychological side because you feel bad about losing money, you can't open the trade, and then your system is gone, right? So what's the solution? In practice, and I'm pretty sure you already know this, in practice, it's about losing, well, as a risk, 1 to 2% of the trading account. So this is the best way. And it's pretty obvious. It's like speeding and stepping on the brake, right? So if you have the trading account as a calculation basis, like let's say 10,000 euro, and you risk 1%, this is 100 euro. So if you lose 100, you have 9,990 or 9,900. So your next risk will be 90 euro, and so on. And if you get a profit from 10,000, 10,100, or let's say to 11,000, then your risk is 110, right? So this is something that changes, and the percentage of your trading account is the base you need to calculate the risk, okay? And of course, if you go somewhere new, try something else, keep your risk low. That's really, really important. So ask yourself also, how much experience do I have with a strategy? If you try something new, so okay, lower risk. If you try a market, like let's say, hey, let's go on crypto trading, keep your risk low, because you don't know right now how crypto moves, where to go. So whatever you do, always adjust your risk to your personal preferences. So this is very, very, very important to your experiences and also to your funds, okay? Because the question is, what happens if the risk you take is too high? Maybe you already know. What happens? Your risk is too high. How do you behave? You freak out, of course. So usually what happens is the risk is too high. I already mentioned this, that people disturb their trade, they close their trade, they feel like I have to go for a revenge with this trade. And what happens is that you're not a rational analyst, you're becoming more trading psycho. And why do I tell you this? Because I tried. And when my risk is too high, I have some irrational decisions. I switch direction. It's very, very likely if you day trade. So if you don't control yourself, it's very likely that you become emotional and not rational. And as a trader, we need to be rational. So if risk is too high, if we lose too much money, we become emotional and act irrationally, okay? So that's very important to think about this as well. So when it comes to the risk, usually people say, okay, I risk just like $100 or euro, and then I'm good to go. But what does this mean really? What does it really mean? Of course, we have to adjust the risk to the position size. And the question is, how do we have the optimal position size? How can we do this? And as you already know, we need some fixed risk, 1% of the trading account, or whatever this number might be, but 1 to 2% might be reasonable. Question is, how can we do this? And I have a chart here. It's Apple. It's a weekly chart. And what do we see? Of course, we see some kind of uptrend. There's the correction of it. And let's say we want to open a trade. Why? Because price is moving up again. It's not an actual chart. It's a little bit older, as you can see. It's from 2020. But anyways, it's about education. So what we see here, we have support, we have resistances, we have a trend line. And what I like here is this little formation, okay? It's like a double bottom, it's a W, it's a formation that says we continue the move upwards, okay? It's like a reversal formation. And this is what we see. So the idea is to open trade the moment the price breaks this level, okay? So that's the idea, basic idea. And entry point will be at $215.35, of course. So the question is, how many stocks can we buy? How many pieces can we really buy? And yes, of course, we can say I just go with like, let's say 100 pieces or whatever. But we have to be aware of one simple question or simple fact in trading. In trading, when it comes to trading, we are following some strategy. The question is, why do we follow a strategy? And the answer is pretty simple, because following a strategy means that we have some kind of speculation of an outcome. And this outcome is determined by probabilities. So a very simple question we have to answer as traders is, in which direction will the market move the next moment with the highest probability? If you can answer this question pretty often, pretty right, you're done. That's it. That's trading. And it brings another question with itself. And the question is, at what point in the market, at what price point, and at what point in the chart is the probability of a positive outcome of my idea 0? And this is the point where we have to exit our trade. And this is where chart technique comes into place. So where is the probability of a long trade, what we want to do with this Apple trade? Where is the probability at 0? Of course, when the trend is broken, right? Because then it's the probability of at 0 by definition that the price moves up again, because trend is broken. Then the trend is over. And this is for us the point where we exit the trade. For example, of course, we can use different measures, different ideas, but just to stick with that idea of following a trend. So that means if you go in like here, breach of the high, you have a higher high, everything is good. Then you have the correction, okay, to the entry level, okay, not a problem, not a big deal. But if price breaks the previous low, by definition, it builds a lower low. And then you don't have the sequence of higher highs and higher lows, which is the definition of an uptrend. Then you have something else. You have like a high, you have a low, you have a higher high, and all of a sudden you have a lower low. Trend is broken. And this is where we want to exit. And this is, of course, that point, right? This is where we need to exit the trade because trend is broken. The idea of this W of this, it's not really a double bottom, but we can figure it out a bit like this. If this area is broken around 170 and 20, the idea of trend following and going up is dead, and we have to exit, right? So this means, how can we have our risk, like, let's say, $1,000 or $100, doesn't matter. So it's just by definition. So optimal position size is risk amount divided with entry minus exit. It's pretty easy, it's pretty obvious. So for example, $100,000 is $1,000 as risk, or $10,000 is $100. Entry point, entry price to 15, stop loss 170, difference is something around 45, which gives us the opportunity to buy 22 shares. That's it, period. Not more, not less. If your risk is, or if the difference between entry and stop loss is bigger, you get lesser shares. If it's smaller, you get more shares. Risking the same money. Very, very important to understand this concept. So now we are safe at the bottom. So safe when it comes to risk, safe in, of course, not in a concrete way. You never know about a black swan, but this is what we can do. It's the only thing we can do. We can say, okay, at this point, I will have my stop loss and I will go out. But what is, of course, still the question, now we know, okay, I can lose like $100 or $1,000 depending on your account size. But the question is, if so, what can I win? What is my profit? And also here, we talk about probabilities. And I know a lot of traders think about, yes, I open the trade and I just let it go because trend is moving, everything is fine, and I get rich quick. But reality is completely different. And reality means that the moment you open a trade, you have a risk, first of all, of losing money in the very first moment. Second, you might be in a profit, but still there's a risk of losing this and your money. So you have to find an exit point. And the question is where to find an exit point. And if you have like a chart on the screen, just look left. Where is the next, where's the next support or resistance zone? This might be very first target. And we talk about probability. The probability question is, what is the probability, or how high is the probability for the price to reach the next level? And if you feel like, yes, I want to go from $10 to $100, question is, how high is the probability to get there in a certain amount of time? Like all the crypto guys, I want 10x. Yes, it's possible, but how high is the probability to get there like in a quick run? It's more than, maybe more than zero, but it might be zero, okay? So you also have to ask yourself, what can I reach? And of course, it doesn't make any sense at all to risk more money than you can get by definition. Nobody would give me a credit knowing that I won't pay it back or less, right? So you want to know what is the profit, you want to know what you risk, and you surely want to make, or you definitely want to make sure that the risk you take over is worth it. So what we can do to determine a profit target is pretty simple. First idea, just look to the left side. Right here, we don't have any. Maybe this might be a profit target, but you see, it's not really worth. It's like having a couple of dollars and a lot of risk. So it doesn't make any sense. So what we can do else is just to have a multiple of the risk taken over. And in this case, it's like 1.5 of the risk we have taken over. So we have like $45 risk. And now we have 1.5, which are like 45, about 60, whatever. Okay. So profit target here is just by calculation by $283. This is a profit target. Mathematical, but let's see how this turns out. What also is pretty interesting and important to consider is that once you have your stop loss and you have your profit target, what also comes to mind is the risk reward ratio. This is a very important concept, and because it shows so much things. First of all, it shows, is the trade worth the risk? For example, what I already showed, if you see that the most probable profit target with the highest probability is very, very close, but your stop loss is very, very far away, I would never go into this trade because it doesn't make any sense. Because you always have to consider, going back, that the market in, let's say, price moves here. What happens here at this resistance zone? Of course, price will have a reaction. It might come back, maybe here. So we give it a little space, we let the price move a bit, so everything looks great. But if I just exit here for the profit target, I risk too much and get too less, right? So from the risk reward ratio, this one doesn't make any sense at all. And if just imagine you do this often, you just have to make a lot of profitable trades in order to get this amount back, right? Because let's say you risk like $100 here and you might get back 20. Doesn't make any sense at all, right? So this is the risk reward ratio. So this is what we really have to take in mind. So this is the risk and this is our reward. At least it needs to be 1. If you risk 100, you definitely want to have back 100 too, right? But you're better off if you get like 150 back, 1.5. And this is what I did here by calculation. So when planning a trade, we definitely need to make sure that the risk reward ratio is at least 1. In practice, it's somewhere between 1 and 2. If you like day trading, if you have like trading style, which is more about movement, more about volatility, it might be around 1. If you are trend following, if you go long term, it definitely needs to be higher than 1 or even 2. If you give it more time, you also need to know, okay, price might come back, I might be down to 0, maybe a little bit in loss in order to get the bigger profit, okay? So in general, try to avoid risk reward ratios that just by looking at the chart where you see, okay, it's not very likely that the price goes higher than this point and that I can get an easy trade. Okay, I would never do this anymore, obviously. So, and of course, I'm talking about the risk reward ratio is a theoretical concept by definition, because if you look at the chart, it's just like, yeah, price can go into this point, into this direction. But what's more important is to look back in hindsight and see, yeah, in general, by doing some calculations, I got this risk reward ratios as in total with all of as a sum of my trades. And this is even more important. So this is the more important thing. How is your overall risk reward ratio that you got, not that you planned? Because market decides what you get, not we do. So let's see how this turned out, because it's just by mathematical measures. It's just about, yeah, I risk 1, I want back 1.5. Okay, I risk 45, I want to have back 60, whatever. So this is how the chart looked like. So what can we see here? Yes, breakout here at this entry point was pretty strong. What we see also here, it's not very good to see, but I hope you can see, there is some little bit of indecision 2 weeks after the break. You see, we have some dojis here, then we have a strong break of this resistance zone here, and then price moves up very, very strong. Some fighting here about some fake, and then price reaches profit target. What you also see is that price continues to move up. And I know some people say, oh, I could have taken $10 more. Sure, we always can, but it's not a matter of trading. In trading, it's about getting clear entry and exit points, clear signals. It's not about having luck. It's about doing some mathematics and doing some calculations. And the calculation says, I risk 1, I want to have back 1.5, 2.0, that's it. Because what we also see, yes, you could have get some more dollars, but if you don't take your profit at a certain point, what you also see is that price moves back. And then the question is, again, okay, in which direction will the price move with the highest probability the next time? And it might look a little bit different now. We have this gap here. I have to look because my lamp is in the chart. So we have this little gap here. We have a red candle. So everything is possible. It can also be possible the price comes back here or even here. And then we had a profit and are back to break even again. And I'm pretty sure we all know how frustrating this is. Okay, so that's why it's so important, from my point of view, to take the profits and just get the money from the table, wait for the next situation to come, and then just go. So that's, of course, the basic idea I have in mind when it comes to risk management. Any questions? What are your questions about this or your comments? Dimitri?
No, for the moment, everything is very clear.
Yeah, okay, great. Because now I want to go with you, because Misea asked me also to take a closer look at some charts. I also would like to do this. And let's see what we have here. First of all, you asked me for Nokia. So let's see what we have. You were talking about, Misea, about my Bollinger Band strategy. So the expander strategy, this is what we have here. And from that's why I have the Bollinger Bands here. This is simple moving average 20, it's in the middle, and I have a little bit short-term moving average is the 8. So I like to combine candlesticks with Bollinger Bands. And what we can see here is that not that we just, I'll do this like this. Let's put this one. So what we see, we have a resistance here. It's a weekly chart, okay? And the definition, the idea of Bollinger Bands and candlesticks is that I like to look for situations where price move is overstretched. It's too high or too low by definition. And I also love the idea of having this in a certain point of resistance, like here, or support, like here, for example. Okay. So what we see here in the weekly chart, that Nokia already reached this resistance zone where price dropped heavily before, and now it comes back. And what we see here is some reversal signal. We have a reversal candle. It's not really a hammer here, but it's It's a gravestone doji a bit. It's a mixture of gravestone doji and shooting star both. So my expectation with the strategy, first of all, price move is too overstretched, and we have this resistance zone. I feel like that it's pretty likely that price might go first of all here. That's part of the strategy. Middle of the Bollinger Bands. So we have something like this. And I also have the expectation that the price moves down to the end or to the other side of the Bollinger Bands. So this gives us also here what we have some support zone. And it's, for me, probability is high that this area might be a good point for profit taking. Of course, it's not an advice, it's just an idea of analysis, okay? So if you trade on your own risk. But if you like to do this, stop loss needs to be here and entry might be here. So from a risk reward ratio, you see middle of the Bollinger Bands, it's less than 1. So it's not really profitable. But going back to the other side right now, it's like a risk reward ratio of, let's say, 1.345, whatever it might be. According to the strategy, and of course also according to support and resistance. And what you also see is how exact do they need to be? The market decides. What else you like to see, Musea?
Well, I told you about, I don't know, let's see emergent investment, because now it's a really problem with this investment funds in Romania, and everybody sell it because there are a lot of scandals. A lot of people from the directorate are paid with free shares, and the people from the stock market are very upset about this. So look a little bit at Evergent. I don't know. Evergent. Everg.
Everg.
N-T.
Everg, right this.
Evergent. No. Evergent investment is Romania. Let me write in the chat, okay?
Yeah. I wonder if it's covered by TradingView.
Well, if you don't find it, look for this one. This one, the second you should find it.
Let's see. Doesn't look like.
Oh, look for Banca Transilvania if you don't find it, no problem.
Yeah, but I'm pretty sure if they don't have Evergent investment from Romania, pretty sure they might not have this one.
This one.
Oh. No, doesn't look like.
Anyway, look for Erste Bank. I will write it, okay?
Erste Bank.
This is from Austria. It's listed on Romania.
Yeah.
Or also you can look for Deutsche Bank or Commerzbank. It's the same if you don't find it. Because okay, now with the interest rate which are going higher, these banks should have more revenues and a lot of profits in the future because the money are becoming more expensive than in the past. So probably the banks are the luckier person of this period. So
Are
probably
they?
the banks will do better in the future. So look at the chart.
Yeah. I mean, in general, what we can see here is that Deutsche Bank, and maybe all the other ones, is facing some kind of, first of all, it's in a downtrend. This is just a correction of the downtrend here. I mean, it's an uptrend in a downtrend, but this area here around 1350 or whatever might be very, very hard to get over with. And let's see. So again, that one is pretty important, right? I mean, it's obvious. We have this area here around 18. Very important. So I'm not very optimistic. I mean, in general, if you talk about trading, we can follow the approach of just follow the move or go with the trend. But the question is always, where are we better off? Are we better off with going with the over trend and still it's down? Obviously, I mean, no discussion about this, right? Right now, it just goes a little bit sideways. There's a correction. In short term, yes, we have this little uptrend here, but how strong is it really? I would rather go look for short opportunities, not as an investor, of course, yeah, but I would rather go look for short opportunities on certain points, like here or like here, because it's pretty likely that investors, once price comes here or here, start selling and getting rid of some stocks. So I would buy maybe here or this area, like whatever we have here, like 850 or so, like here, and support zones. But right now, I wouldn't, me personally, I would not invest into Deutsche Bank or any banks, because the question always is, why do we trade? Because we want to make money. So why should I buy a dead horse which is not running when I can buy something else which is running, right? So maybe we should look for something else. You also had Baba, right? Alibaba. Let's see this.
Also, I have asked about Alibaba to see the chart and to give some insight, because the Chinese market, it's all the time with a lot of surprises. So
yeah, I mean, with Chinese markets and Alibaba, we have the we have the situation that the government just, well, not really closes things, but regulations get in. They want to speak a word with everybody. That's the reason why Baba dropped so hard. I mean, dropping from over 300, 320 down to 130 is pretty hard within a couple of months, right? This is an obvious, clear downtrend. So what we have here is support zone, which is broken. And now we have situation like this, that this one is broken, that comes back again. And now the question is, what is the higher probability that it goes down a bit, maybe to this level? It's more or less the same here. Maybe to this level, or maybe to this level, right? So it would not be very surprising if Alibaba goes down to 60 or around that area. So for me, it's not really a buy. It would be a buy if you see something like this, right? What we discussed with Apple. Then you can enter here, or let's say here. But right now, I wouldn't touch it at all.
Also, I don't know if you find this. This is a heat in Romania now. It's called Nuclear Electrica. It's a power plant.
I'm not sure, because if they don't cover the banks from Romania,
No,
they should
it's power
that.
plant. It's nuclear energy.
Yeah.
Look, if
What's it called?
nuclear, I wrote it in. No, has this one.
Yeah, well, it's that one. It's this
Yeah.
in Germany.
This one, it's the hit on Romania stock market now. It has dropped from 11 to 4, and now from 4 RON it's going to 48. This is 20 times more for.
So that is what the chart looks like. I get here. So
You know,
not really
Too
something.
much information, yeah.
Not really much information. So it just looks like it dropped.
yes, probably you found some GDR or global depository receipts on them. No problem. I don't know. Choose Art. Choose you a stock which is like a running horse and show it. Okay.
Right now there is no running horse, because we are in a situation of it's not a crash, of course not, but it's a correction. So I mean, we can go for, like,
I don't know, choose American stock, Tesla, if you want, or I don't know, Facebook.
I go with Tesla. Why not?
No.
Then I also have to go. So we take a closer look at Tesla. At Tesla we see, and still it's a weekly chart. It's a weekly chart the whole time. I mean, it looks like all the indices as well. Not exactly, but a bit. We have the high. I mean, this is also pretty interesting. See, it just touched base into the support zone, comes back, and now we have this situation. It's an M. So as an investor, I would carefully watch everything around 900. Because if this one is broken, you never know. Comes back, maybe go back to 600. Maybe go back here. Somewhere around this. This is more likely than just the way up. Because market environment is bearish right now. We have inflation going on. So this looks like a double top right now for me. And if market doesn't move, like, let's say from here back up, it's pretty likely that we have this situation. Just as a quick analysis. Okay. So, and I think that shall be enough for today. Any more questions, comments, or something regarding the book? Yeah, please.
Yeah, thank you very much for your presentation. It's very useful for let's say for an investor, because I don't want to become a trader, but right now the Romanian stock exchange became quite interesting. And I don't know if you know that the stock exchange stepped up a few months ago to an emergent status market here in Romania. So the stock exchange is growing, and a lot of people are investing at the moment, are looking to invest, to be more correct. And I definitely will buy your book, because I'm interested to get your advice.
Thanks.
And I will look forward to meet you in other conferences. We are conferences organizers. Okay. So maybe in the future we will have the opportunity to have you as a speaker.
Sure.
And I have a final question related to the cryptocurrencies market.
Yeah.
How do you see it?
Well, we could just go to that cryptocurrency everybody looks at. It's Bitcoin.
Yes, it went down.
Yeah, everything like this. Okay, crypto. That's the one. A problem with not really a problem, but situation with cryptocurrencies is, first of all, are you a believer or not? This distinguishes people who trade or people who just buy and hold. So right now, in general, what we can see is we have this zone here, which holds a bit, and we have this one. It's very, very strong. It's from last year, right? So it's like 2021. And we also have a very strong resistance zone. So price right now just goes somewhere here around. I would feel like it's bullish when price goes over here, better is here. Because then we have this support zone really holding it. Everything around this is okay. Even though if you're invested and just like go down like $14,000, which is pretty hard, but at the end of the day, nothing has happened. It's just a range, you know, going up, going down, going up, going down. And this is by definition a trend continuation pattern. The question is, when do you enter it? If you enter here, oh my goodness. If you enter here, well done. Okay.
Yeah.
But by definition, this is a very broad, I mean, from 64 to 28 or around or 30, like 50%. This is hard to, but right now we are somewhere in the middle of this range. So it's neither fish or flesh. It's just somewhere in between. And if prices go down right here, and you feel like it's a good situation, and you feel like I'm a believer, this might be a good price. But if it's not a good price, you will find yourself around this area, which is around 16 or even lower. Because that is a backlash of a steep movement that you don't have any points who hold, right? So that's why we have this broad range. So it's pretty likely that this one here will be the bottom, and this will be bullish because then you also have some kind of beginning of a small trend within this range. So for me, it would be best, like, let's say this, and then breaking out. So this would be like the first uptrend within this range. If you look at a chart and you can find some formations like this, it's very likely that you see that the price moves then into the direction of the previous move. So right now I'm not bullish, not bearish, but a little bit more positive about cryptos from viewing that chart.
Okay.
So if
in the long term, okay.
so, Art,
Yeah.
if you want, we can end it here. And thank you, Mr. Dumitrion, that you have joined us. You make you had free time for us. We are delighted that you could join us, and keep in touch.
Yeah.
Yes, of
Thank
course.
you. Thank you
It
for
was a pleasure for me to meet you both. Yeah.
Yeah.
Okay. Bye.
Thank you very much.
Have a nice. I will stop the record now.